In your book, The Tragedy of the Euro, you make the interesting point about how banks were able to use sovereign bonds from countries like Greece and Italy as collateral at the ECB for short-term loans, the kind of repo transactions. Do you think that, does that system need to be eliminated if we're to get rid of the kind of moral hazard that you're talking about, where countries have an incentive to borrow and banks have an incentive to lend because they know they can always turn around to the ECB and borrow, get money back instantly?
Yes, this is a big problem. If you're a Greek government, you just spend, you don't tax, you just spend, and you pay with writing paper, government bond, you give it for the bank gives you money, the bank takes the government bond, goes to the ECB as a collateral and receives new reserves, can expand the money supply. And the problem is that any government can do it in the Eurozone, so there's incentive to impose the cost of this policy, because the cost of the policy is that prices rise in all over Europe, so you can externalize part of the cost on users of the currency in foreign countries. So this is a big problem. So you could easily solve it, this moral hazard, by saying, okay, the ECB does not accept government bonds as collateral anymore. But then, of course, then all governments would collapse immediately. I mean, they would have to default immediately. You have to think that central banks now actually in the banking system, one of the main purposes is to finance governments. So if you stop this financing, they go bankrupt immediately. But of course, if you say no to this anymore, it would solve immediately all the moral hazard problems, and the euro could be very stable.
Do you think that there needs to be some form of Eurobond introduced, some kind of collectivization of European debts if monetary union between all these countries is to work or not?
They certainly are pushing in this direction, and to some extent we have already Eurobonds by the rescue fund, the EFSF, that is guaranteed by all governments, and in the future can give loans to individual governments to bail out banks and give them credit lines, and these are backed by all. So to some extent we have already these Eurobonds, but they want, yes, to get more into that direction. In any way, we had this from the very beginning of the euro, because there was the implicit guarantee for all for government debts, for all government debts in the eurozone, and all could issue debts that at the end would be supported by the ECB and the stronger government. So what we see now, we get this redistribution that existed from the beginning of the eurozone. It gets more and more explicit, and it gets more tight. And the Eurobond would be, well, the most obvious symbol for this redistribution that was there from the beginning.